Hi, this is Kevin with your daily Forex report for July 28th, 2011. What you're looking at right now is the US Japanese yen chart on the daily time frame. We have closed down during the previous session. It's actually a pretty decent sized downward candle, and we have been moving downwards for the past couple of weeks actually, so the overall direction in this trade bias wise is downwards. In the coming session, look for this pair to go as high as 78.29 and as low as 77.05, with some support around 77.36 and resistance around 77.98. And that resistance level is very, very close to the to a 78 level, the even 78 number. So that is a really strong level of psychological resistance, as well as a couple of other resistance points. So just kind of keep a close eye on that, and look for it to stall out around the 78 level if it decides to go up to that point. Alright, switching over to the Euro USD chart, we did close lower on this pair in the previous session, and the downwick was actually quite large. The overall direction on this pair is sideways. We have been moving up for the past couple of weeks, but just recently we've turned downwards and are starting to move down. It could be a gentle correction and we could continue upwards, but considering the overall sideways nature of the pair right now, looking for this pair to actually continue down. So look for this pair to go as high as, in this coming session, 1.4486 and as low as 1.4179. Look for some support around 1.4256 and some resistance around 1.4410. Alright, moving over to the pound USD daily chart. This pair has been moving up the past couple of weeks. We haven't had, if you look at the Euro chart, we've had a decent correction within the last 2 days, and the pound has actually had somewhat of a correction, but not as big as a correction. These two pairs are very heavily correlated, with the bigger range being on the pound, so kind of keep an eye on both of these pairs simultaneously. So if the Euro decides to drop, it could pull the pound down as well. So just keep an eye on that. In this next session, look for it to go as high as 1.6494 and as low as 1.6247, with some support around 1.6309 and resistance around 1.6432. Alright, last but not least, we have the US Swiss. This pair actually did close down within the last session, but it's a very, very small candle, and even the wick, the top and the bottom, are pretty small considering the normal daily range over the past week or two. So this pair is consolidating down pretty tightly and has formed a decent range here. So on this next session, we'll look for it. If it decides to break up or down one way or the other, we'll definitely be keeping a very close eye on that. Look for this pair to go as high as, in the next session, 0.8104 and as low as 0.7914, with some support around 0.7962 and some resistance around 0.8057. Alright, as far as news announcements go for this Friday, we're nearing the end of the month, so we do have a couple of different news announcements, but since we're nearing the end of the month, if you're up for the week or for the month, considering the two news announcements, just be careful. Try not to give all of your profit back, especially it being the end of the month. If you're up for the month, then just kind of take your profit and run. You might want to sit on the sidelines. But for those of you who actually want to trade the news, at 12:30 p.m., we have the gross domestic product coming out, GDP coming out, and that is signified as a high market mover. So just pay very close attention to that. And actually at the exact same time, we have the Canadian gross domestic product coming out as well. And the forecast on the gross domestic product for the U.S. is 1.6%, and the previous is actually 1.9%. So we're looking for that to drop, or the market expects it to drop about 0.3%. And the U.S., or the Canadian rather, gross domestic product is looking to, the forecast on that is 0.1%. So we're looking for that to go up by 0.1%. So keep a close eye on that. It could cause some movement in the U.S. Based currency pairs, U.S. Canadian dollar especially, considering they're both coming out at the same time. So once again, at 12:30, we'll be looking for that. And before we go today, we just kind of want to take a little bit of a closer look here at the U.S. Swiss trade setup that could possibly be coming out of this. If you'll notice, we actually had a gap at the beginning of this week, and we dropped by 2 candles, and it's steadily been consolidating ever since. So this point here, as well as this point here, it's a rather tight range, and it's already tested it a couple of times within the past 2 days and has not been able to break it. So in the event that we do break this level, on the upside, I'd be looking for it to come right around to this portion here. Price tends to go where it has in the past, especially whenever we had levels of support that turn into levels of resistance. So your little window of opportunity to trade here is about 35, 37 pips or so. So I'd be looking to grab about half of that, once again considering it's nearing the end of the week and also the end of the month. Just kind of drop your lot sizes a little bit, and just be a little careful with it. So if it decides to break on the downside, this pair has been on a steady decline for quite some time. We're actually hitting lows that we have not seen since 80s, 70s, probably even before that. These are, for all things considered, all-time lows. So as this thing continues downwards, just if it does decide to continue downwards, then you can possibly profit off that as well. And something you also might want to look at, just real quick before we go, is Fibonacci levels are a really good way to determine not only whenever pullbacks are happening, but also how far a trade is slated to go. So say this is the beginning of the drop, and we've got about 430 pips or so for this first initial move, and then we've retraced about 200 pips, and then we begin that drop again. So we would be looking for this about 430, 440 pips to equal the second leg of the trade. So it's still trading at its current level. It's closer to 300, so we still have about 100 pips to go before A and B equals C and D. So providing this is the 50% retracement level. So if it does decide to break down, you have a good 100 pip window here to actually grab just a little bit of money before the week ends and the trading week ends and everything is rounded out. So that about does it for today. So until next time, this is Kevin. Good trading.